VWAP, volume weighted average price. Is this something that you would trade with? Is it something that I would trade with? Well, in all honesty, I don't trade with it. As you know, I don't trade with any indicators. We use support and resistance, use price action to trade. But today, I'm going to show you how to use the VWAP system, simply because someone requested it, and I'm doing a little series on other indicators so that you can figure out how other people trade, and if you need to trade with something like this, you might want to use it in conjunction with the trading that you're doing. These systems all work, but this is just another lagging indicator, which in my opinion is not the best, but a lot of people swear by it. A lot of people live by it, and basically it's a moving average indicator that is divided by the volume. It works in the volume into the whole pricing. You can't really use this as a swing trader and a 4-hour trader like we use it. It's more for lower time frames, because you'll see why. I'm going to show you now why that is. I'm going to take my ugly muck out of the way, and we're going to go and have a look at the charts, and then we can go and see for ourselves what we're looking at here today. Let me just move it over to the side here so that it's completely out of the way, and we'll have a look at the charts. Now, I'm not going to do a lot of editing on this video, so please excuse the quality of the picture, but I am going to do my best to show you how the VWAP works. So let me take you and show you how the VWAP works, and then we'll take it from there, and then I'll talk to you about our strategy in the market and how we trade in the market with regards to actually making money. Because these squiggly lines, as I've told you a million times, they don't make you the money. You and I both know that the money is made with a strategy and the way you approach the market at the end of the day. Because I don't think you really believe that you can make money off a squiggly line. If you go on a course, they're going to tell you that. I mean, there's a lot of people that will advertise this VWAP to you and say, make 120% profit on it, make 100% profit, this will make you profit. No, the squiggly line's not going to make you profit. Your approach to how you trade it, that's what's going to make you the profit at the end of the day. You and I both know that. Anyway, let's get to it. Let's have a look for the indicator. So the indicator is called the VWAP. So let's stick that in, volume weighted average price. There we go. Pretty sure that's in now. Let me see if I'll be able to adjust it. Firstly, hopefully, let's see what settings have we got here. No, these are not the settings I'm looking for. Of course, they're not the settings I'm looking for. The settings I'm looking for are these settings here. Now, what most people will tell you is to take the upper band and the lower band out, and then you just trade with the middle line, the VWAP. I'm not going to do that. I'm actually going to make the middle line a little bit stronger, and I'm going to leave the upper band and the lower band in, going against general consensus. Because the general consensus is, now here's the reason you can't swing trade with VWAP. Simply because the bars just go through the line. There's just no way you can use a 4-hour to trade this. So let's look at the 15-minute, and I'll show you how the guys trade it on the 15-minute so that you can get a good idea of what exactly is going on here. Now that makes it a little bit more clear, doesn't it? That gives you a bit of a clearer picture. So this thick blue line in the middle, that's your volume weighted average price. Now, the outer and lower line is just very much a bit like a Bollinger Band. It's just an outer and a lower level, right? What do they show it as? They show it as upper band 1 and lower band 1. It's part of the calculation. Now, most of the guys will tell you to take that out, and most of the guys will tell you that you must, when it gets to this VWAP, you should use it as a support and trade out. Or when it gets to this VWAP, you should use it as a resistance and trade down. And I get that. Or wait for it to retest and then go and then trade up. But what I noticed about the VWAP was this. Most of the time, the price just goes through it, just keeps on going through it. So how do you trade it in a situation where every time the price gets to it, it just goes through it? I mean, it's pretty insane to think about it, but you know, some of the guys will say to you, if the price is on top of the VWAP, you only go long, and if the price is below the VWAP, you only go short. But me being a support and resistance price action trader, a person who doesn't use indicators, I looked at this and thought, no, do you know what? I don't think that's the way to trade it. So I'm going to show you the way that I would trade this and the way that I would use it based on the way that we trade, based on the methods that we use to trade in the market. Because I don't believe that the standard way of using this volume weighted average price will work. I don't believe it can work for you in any way, shape or form whether you're trading 15 minutes, 5 minutes, 4 hours, whatever the case. What I'm showing you here is on a 15-minute. We could show you on a 5-minute as well, but it works better on the lower time frames. I have to say it doesn't work on the higher time frames whatsoever. I'm now going to show you what I think and the way I think. Now this euro US dollar, firstly we've determined, let's see. Okay, let's go to the higher time frame. Let's go to the day and have a look at it and see what we've got. And what we've got a bearish structure. The euro US dollar is going down. So we know that the euro US dollar is bearish. Now we go back to that, was it 15-minute chart? The seconds here. 15-minute chart, and we're going to have a look there. All right, so now we know that it's bearish, and now we've got a situation where we've got the volume weighted average price in, we've got the upper band, and we've got the lower band. Now, while everybody else has told you to take the upper band and the lower band out, I'm telling you to leave it in. And here's why, guys. Because what I believe for the volume weighted average price, and I believe the way we should trade it, is this. If you're going to use it on these lower time frames, look at it as a magnet, not as a support and resistance as everybody tells you to. Look at it like a magnet. And what I say is, okay, the euro US dollar is bearish. Now, if you understand anything about price action, you're looking at this and thinking, there might be some money lying up here. There might be some money lying up here. So there might be some money to be taken in this general area. Now, hear me out here. This is a magnet. It keeps coming back and going through. Look how many times it goes through this VWAP. All the time. It just keeps on going through it, up and down, up and down, up and down. Time it gets there, it comes down, it comes down, it goes up. Without fail, actually, it keeps going through this thing. What I'm looking at is, okay, at this area here, it's broken through the upper band. And I would say, if you get a red candle developing out of this upper band starting to come down, take the short. We know it's bearish. Take the short right down until it gets to the magnet. Now, if you think it's going to be a support and it's going to bounce out of that area, then fine, sell it. Or you can use our general consensus where we follow the stop loss down and we just put the stop loss behind it and follow it down behind the price, whatever the case. I would kind of use the VWAP or scalping, if that's what you want to do. And what I would do is I would say, fantastic, that's a magnet, that's a short. I'll take the short here with a view to it coming back down and going back through this volume weighted average price as it keeps on doing. And then I wouldn't actually take the long. I'd let it go back up again. And if it comes short again, I'll wait for it to come short again and go back through. Obviously, I'll just wait for a bit of sign of weakness, maybe a red candle developing, and take the trade down into the VWAP. Now that's how I would trade the VWAP. And in fact, I would trade it that way on absolutely any one of these products. For example, the US 500, we know it's bullish. We know that this has come through the VWAP. So what you're looking for here, it's on the low, it's gone through the lower band, it's retracing, it's coming back down. Now you and I both know in price action terms that on a 15-minute chart, there'll be some money here at the 59.86. So if this gets down this far and then gives us a green candle, you can effectively say to yourself, I'm going to take the long trade out of here through to the VWAP, and I'm going to take it through there and make a profit and then get out, and it's a bit of a scalp. Look, there's no necessity to trade this way. I mean, if you want to trade on the lower time frames, it is very risky. We all know that trading is super, super risky. In fact, 60 to 80% of traders lose money swing trading. And on the lower time frames, like we're playing around with here on a 15-minute, a 5-minute chart, 99% of traders lose money. But this particular indicator might actually give you a bit of an advantage. It might actually give you that insight as to, okay, I've seen the price action, because now you understand price action because we trade price action. And now you can also see the possibility of it going back through the VWAP. So I'm quite happy to actually trade it that way. So, you know, the way I look at it, guys, is at the end of the day, the way we trade is not the way of the VWAP, of the MACD, of the moving average, or anything like that. You and I both know that we trade with support and resistance. And the reason we do that is because the market's a 50-50 game. It can go up or it can go down. We both know that. We've discussed it over and over again. And why? It's because the market's made up of buyers and the market's made up of sellers. So there's no guarantee of which way the trade's going to go if you take it anyway. But what we are looking at is a strategy so that you don't lose the money. money. So the best way to trade is actually the normal support and resistance, and with a proper stop loss and with a proper take profit. So what you're looking at is you want to make more on your wins and lose less on your losses. And how do you do that? The old story, 1% of your account. So if your account's $100,000, you risk $1,000 on every single trade, the same amount. And if you don't want to risk 1%, risk 2%, risk 0.5%, whatever the size of your account, just keep the risk the same on every single trade. And if you do that and you look at your take profit, and as long as make your take profit a reasonable take profit. Don't say, oh, it has to be 2 to 1, so I'm going to put a 2 to 1 take profit in here. When you know there's no chance in hell that you're ever going to get that profit, there's no point in that either. So if you're going to have a take profit, at least make it a take profit that you might achieve, that you might actually be able to achieve if you wanted to actually take the profit. So now you've got your $1,000 stop loss. You go into the trade, you look at how much of a trade size that's going to be. So you work it back from your invalidation area. That's an area that if I looked at the trade, I would not trade there. I would not get into that trade ever, right? That's it. That trade, no. That's your stop loss. You put your stop loss in there, you work back and you say, okay, $1,000 will give me that size of a trade. That's the size of the trade you're going to take. And I want to make more on my win than I would on my loss. So I want to make $2,000 on my win. So will that work out? Will that risk to reward work out? Will I be able to make that $2,000 if I take this trade? At least $1,500. You've got to have more than wins than losses. And the reason behind that is you're going to lose 5 trades and you're going to win 5 trades. And on the 5 trades that you lose, if you lose $1,000, and on the 5 trades you win $2,000, the net win is a $5,000 profit at the end of those 10 trades. And that's the point of your trading, really. It's not rocket science. It's quite simple. It's the simplest business plan in the world. And I always emphasize, do not dollar cost average. While you're here, drop down, don't forget, get your free Forex book. It's down there in the description. And there's also a funded trader account if you're into that sort of thing. So guys, that's how we trade. Fundamentally, we trade with a standard stop loss, making it so much easier and so much less hassle. So if I take you here and I say, let's get rid of the VWAP, okay? Remove 4 drawings, remove 1 indicator. So now there's your US 500. We don't trade on the 15-minute. We trade on the 4-hour. We go to the day. We just go and have a look on the day. We go and see what we've got here. So what's happened on the day chart is we've had this bounce, what I would call most likely a dead cat bounce. You've got to remember this trading is on extremely low volume. And on the day that I'm looking at this, it's almost a public holiday. So why would anyone want to trade today? Now, what we do is we take it to a line chart. When you're on a line chart, you look for a resistance. There's your resistance. You take your resistance, you draw it in. You look for a support. Where's the support? And the reason we use a line charts, guys, the reason we use a line charts is because it's closing prices, not highs and lows. And we're looking for an area where the price gets to, goes away, gets to, goes away. It's an area that it likes. There's an area that it gets to, goes away, area gets to, goes away, an area that it likes. There's a resistance and a support because that's where money is lying. That's where orders are lying. And that's why it keeps bouncing away from there. Put it back on the candles. And then we go and trade on the 4-hour because that's where we trade. We're swing traders. Now we're not using VWAP. We're using our standard, our little copy, okay? Our little idea as to where we're going. Now we know that US 500 is bullish in general. It is heading to the upside. Next year, it's probably going to go pretty far into the moon. A lot of people will call for a crash, but I doubt that. I doubt that's going to happen. I see there's going to be a lot of positive moves next year. Best case scenario, this thing does another retracement back to the 58s or 57s. It might even go back to 57 because there is some money down here. And then we get a long run going through into the year, taking us higher than our high, which was at 61. So support and resistance. You take it from the day chart, draw it in, easy peasy, take your trades, manage your risk, and that will be your best trading. How can I put it? Your best trade, let's say, your best trade. So guys, thanks for watching that. This is a pretty simple video today. I haven't made it complicated and I haven't made it as fun as I usually do, but I've done the best for you. It's a holiday week. I've been on holiday most of this week, been kind of an easier week, but everybody needs a break, don't we? We're going into the new year and we're going to have an exciting year together. We're going to make loads of money together. Looking forward to it. Thanks for watching this. Don't forget to watch the last videos if you want to know more about our trading strategy and how we make money in the markets. Cheers, guys. Till the next video. Thanks and bye.